This data visualization shows a simultaneous collapse across global markets. The Bombay Stock Exchange drops 412 points right at the opening bell. The Nifty 50 sheds 118 points. And moving in the exact opposite direction, the red line tracks crude oil prices spiking instantly. The trigger for this global sell-off was a morning national address by U.S. President Donald Trump. During the speech, he laid out a plan for a sustained 2 to 3 week bombing campaign. The stated objective is to hit Iran so heavily that the country is pushed back into the Stone Age. But institutional investors are used to aggressive military rhetoric. The sudden financial panic stems from a specific policy directive buried later in the broadcast. The United States officially announced it will no longer secure the world's shipping routes. The administration told allied nations that if they want oil, they need to go into the region and protect their own supply lines. For decades, the global economy has relied on the American military guaranteeing safe passage across the oceans. That guarantee is now gone. This topographical map highlights the geographic reality of that decision. The glowing lines represent the immense volume of crude oil flowing daily through the Strait of Hormuz, a narrow, critical choke point between the Persian Gulf and the open ocean. With the U.S. Navy stepping back, regional actors are moving to fill the void. Iran now has the unchecked capability to physically block this artery and cut off global trade. Without overarching military protection, massive energy vessels are left effectively stranded in open water, highly vulnerable to seizure. The resulting power vacuum is quickly drawing in regional military forces. The United States has recently massed a large contingent of troops in the nearby United Arab Emirates. Active cross-border violence is already underway. Reports show direct strikes on a major Iranian missile base in Isfahan, followed quickly by retaliatory Iranian drone or missile attacks targeting Abu Dhabi. The removal of a stabilizing superpower allows a regional conflict to gain direct leverage over the world's energy supply. Every shipment is now subject to the tactical choices of local combatants. While the physical conflict escalates in the Middle East, the diplomatic structures designed to contain it are breaking down. In his address, the U.S. president openly mocked the French head of state, Emmanuel Macron, relying on internet rumors about his marriage to publicly humiliate a key Western ally. The rhetoric extends to formal defense pacts. The administration dismissed the NATO alliance as a paper tiger, openly threatening to withdraw the U.S. entirely. The immediate casualty of this diplomatic isolation is Ukraine. The United States made it clear it will no longer fund or protect European defense lines against Russian forces. This leaves European nations scrambling for alternatives. The UK government is currently rushing to convene an emergency summit of 35 nations, desperately trying to find a way to reopen the Strait of Hormuz without American intervention. These emergency meetings reflect a stark realization. The country that built the modern security apparatus is actively dismantling it. Financial publications are labeling this approach blind fury, a war strategy defined entirely by unpredictability and raw aggression. As the U.S. exhausts its military resources and publicly alienates its closest economic partners, another global power is watching the fallout. China is the silent beneficiary of this geopolitical fracture. The strategy in Beijing relies on a simple rule: never interrupt an adversary while they are actively dismantling their own global influence. By staying completely quiet, China positions its massive, uninterrupted industrial and energy infrastructure as a reliable, stable alternative to the chaos in the West. This brings us back to the stock indices crashing in Mumbai and the spiking cost of crude. The volatility across global indices and the surge in oil prices reflect a structural shift in risk. Investors are calculating the price of a world where the gates of trade are no longer guarded by a single superpower.